For the past 5 years, we have been watching the largest housing bubble in US history continue to build up to record levels, and finally it is starting to crack. Today, there are dozens of markets that are already showing major weakness, and these developments have gone largely unreported in the national media because the market is still strong in most of the Northeast and Midwest. But as you are about to see, the sentiment is shifting in a major way. People are starting to panic, and major players are admitting there is something wrong. While some of these cities have been on major decline since 2022, others are just now getting started. For example, in the Austin market, a typical single-family home has lost 22% of its value in the last 3 years, amounting to about $160,000 on average. In Punta Gorda, it's the same storyline, with homes falling about 14% on average, and plenty of other cities in Florida that I'm not going to list out one by one are following the same trend. But these weak markets are not strictly just Florida and Texas. This is spreading to plenty of other southern states. In New Orleans, for example, a typical single-family home has lost 18% of its value since the summer of 2022. And we can go on, but the storylines are practically the same. For many cities outside of the Northeast and Midwest, they are either experiencing an inventory explosion with prices flattening out and getting ready to move down, or they are in the midst of a major downturn that doesn't seem to be stopping anytime soon. So what more is there to say about these regional markets? I've already covered them in depth in previous videos. This one is different. It's about the home builders and the major developments we've seen over the past 2 weeks that could reshape where this market is headed next. After all, in real estate, new homes are the sector that drives the entire market. Why? Well, it's simple. Most people would rather buy a new home than an old one, which means that the driver of home prices is the leader of the pack, which is often one of the major builders. If your existing home costs $400,000 and Lennar comes down the street and builds a new home for $380,000, think about what that does to your price. It becomes very hard to sell existing homes when the new ones are often less or on par with your old sack of crap. On top of all that, new home builders are often large corporations who have no emotional ties to these homes. They are quick to drop prices if they have to because they answer to shareholders, not families. So what is happening to the new home builders? Well, take KB Homes as a great example. They just recently reported earnings and they become very honest with their outlook. They canceled 9,700 lots, about 10% of their future pipeline. Acknowledged that this year's spring selling season was awful, and most importantly, they dropped prices and demand remained flat. The exact quote was this: "We proactively adjusted base pricing in our underperforming communities. Despite these actions, demand weakened." And the CEO acknowledged that prices are simply not low enough, saying even as prices fell, they still weren't low enough to kickstart demand. Now the stock price for KB Homes is down 40%, and the whole industry is sort of spiraling. You have Lennar down 37%, Pulte down 30%, Toll Brothers, D.R. Horton, all the major builders responsible for about 1/3 of all the new homes built in the nation are essentially crashing from a stock market perspective. The Pulte home guy, the grandkid of the founder, he's on Twitter every day screaming for the dismissal of Jerome Powell, begging for rates to come down. And this is happening in what seems to be an all-time high for prices based on a national Case-Shiller, so that tells you everything you need to know. From an outsider perspective, this chart may suggest that we're still in the bubble, in the good times for sellers and investors. But home builders are crashing, and their founders and families are quite literally begging for low rates and relief. This here is a facade. In the back, there is true panic happening, and the builders tell you everything you need to know. To make matters worse, the real pain in the housing market is being masked by what I call payment power arbitrages. It sounds complicated, but it's really just a clever head fake. Take Lennar, for example. Instead of lowering home prices to attract buyers, they offer rate buydowns, basically paying to lower the buyer's mortgage rate. On paper, it looks like nothing has changed price-wise, but behind the scenes, the builder is spending money to reduce your monthly payment without changing the sticker price of the home. It's a pseudo discount that doesn't show up in the price. Why do they do this? Because it works. A dollar spent lowering your interest rate gives you more monthly payment relief than a dollar taken off the price. This works especially well when the rates are high like they are now. But here's the problem, it distorts the market. That $500,000 home isn't really worth $500,000. The buyer just got a hidden discount in the form of financing help. If they ever try to sell, the next buyer doesn't inherit that cheap mortgage. So unless prices go up, the original buyer could be sitting on a big loss. In other words, these buy downs prop up prices that aren't actually sustainable. It's a short-term trick to keep the numbers looking good, but long-term, it's setting people up for a rough landing. And that's already happening. Net profits across the board for many of these builders are getting slashed. KB Homes, for example, their net income is down 36%. NVR or Ryan Homes are down 26%. Pulte is down 21%, and Toll Brothers 26%. This means home builders are starting to profit less and less by a significant margin. I mean, even professional housing analysts are calling this out. For example, here you have Lance Lambert saying that the pricing landscape is smoke and mirrors. Pulte, the director of the Federal Housing Finance Agency, is now pushing to allow crypto holdings like Fartcoin to be counted when assessing home buyers' reserves. This is actually happening right now. Meanwhile, the number of completed unsold homes is reaching levels not seen since 2006. So what's really happening here is that the market is turning very quickly, and we can see that transparently by looking at it through the prism of the new home builders, which give us actual numbers because they are legally forced to by shareholders. And we see through those numbers just how much cutting they need to do to attract buyers. For example, Lennar has cut their prices as much as 25% in an attempt to maintain volume. Now, because of this, you are getting some wild price action in existing Lennar communities, and it's not something I can take credit for. It actually came from Reventure Consulting, probably the biggest housing YouTuber. I try not to use his clips on this channel because he is a fellow creator, but here in his latest upload, which I will link below, he brought something forward that is worth re-examining alongside this video, and it has to do with Lennar, one of the biggest builders, basically crashing their own customers' value. Take a listen.
And I saw this real time down here in Florida on a property I was touring. And I actually just want to show you guys this because I'm going to show you the real world ramifications of these price cuts that Lennar is doing. But this is a house in Parrish, Florida, which is to the south of Tampa and south of St. Pete. Now, what's really interesting is this house is a 3-bed, 2-bath on the market for $265. But if you go back and look in the history, the owner bought this house for $318. In late 2023. So they bought it for $318, but now they're selling it. They listed it at $299. They've had to now cut it to $265. It's actually pending, so we'll see if this house sells. Hopefully it does for this owner. But in general, they're taking a huge loss. They bought it for $318, and they're taking a $50,000+ loss less than 2 years later. So this is yet another example of, sellers losing money on the U.S. housing market. But you ask the question, why are they losing this money? Well, in the same community, Lennar has the same floor plan 2 years newer on the market for $249,000. So this is the same exact community. And so this is the same house. Folks, this is the same floor plan, 3-bed, 2-bath. 1,486 square feet. That's 3-bed, 2-bath, 1,486 square feet, but brand new, $249,000. And actually, all of these newer versions of these homes pretty much are pending at $254,000, $255,000. I mean, it's a huge level of price reduction. And so I kind of am wondering how this is going to turn out for Lennar. Because on one hand, yes, they're driving deliveries and new orders. Their new orders were up 6% year over year, but they're also crushing the value of anyone who bought in their communities the last 3 years.
So right now, as we speak, new home builders are well aware of just how bad this market is, and they are making sure to slash prices in an attempt to keep revenues going. In the meantime, this is having a delayed effect on the existing market. People would rather buy new homes than existing ones whose owners haven't yet realized just how soft this market has become. Sure, in some spots it's down 15 to 20%, but it's going to take years to play out, and nothing is stopping the new builders from slashing more, appealing to stockholders, while at the same time causing collateral damage to the rest of the market. Thank you guys for watching. As always, please make sure you hit that like and subscribe button if you enjoyed it, and let me know in the comments below what you're seeing if you're buying or selling one of these big builder houses anywhere in the country.